where we were and where we have come in this first quarter. You'll be pretty surprised. Hi everyone, this is Christine Kopr with Sotheby's Realty in Vancouver, BC with your March market update. So today we're going to cover four things. We're going to talk about the stats from last month and what we're seeing in the marketplace. We're going to also compare Metro Vancouver, Vancouver West, and Vancouver East and see where we were and where we have come in this first quarter, and you'll be pretty surprised, as well as talk about mortgage rates, what the Bank of Canada announcement and what the opportunities are, and followed by that, for anyone that's a subscriber, some special opportunities. Let me get right into it. Every month, as you know, I love to talk about months of inventory and review the stats with you because I think it's an excellent way to predict which way the market is heading. March of 2023. You may have caught my previous video discussing the amount of sales we did in March. It was pretty spectacular. We have been going through the dredges for the last 6 months, and March was a real surprise. Everyone is actually pretty surprised at how sales have recovered. While they are still lower than our historic average, they are so much higher than they were before. And in fact, last month's stats didn't even touch on the fact that March, month over month, was 40% higher than February for sales for the Real Estate Board of Greater Vancouver, which is fantastic. We're also going to talk about the little bit of recovery we're seeing in prices. Nobody has been expecting there to be such a quick recovery, especially as we have continued elevated borrowing costs and low volume of sales. But lo and behold, here we are. So March 2535 sales, a big gain over February. Month over month, it was a 40% increase. It was a 43% decrease year over year in terms of the activity and the sales in the marketplace, but that's to be given. Remember, 2022 was an out of the park, craziest year we have ever had. It is not sustainable. It wasn't anywhere in the realm of our 10-year averages. It was the highest year on record ever in terms of sales. When we put 2,535 sales into context, it's about 28% below our 10-year average. So a little bit on the lighter side, but a lot better than what we were seeing in February and obviously earlier in January of this year. New listings, the amount of new inventory in the month of March was 4,317 homes. That's up almost 25% month over month and down about 36% year over year. And on a 10-year average, the new inventory that's come on in the spring market is down 18%. This is not typical in terms of the amount of listings we would expect in our spring market. Spring break is over and here we are. And while we are having more listings come on the market and the spring market is underway, it is still very low compared to what we would normally expect. And we're going to look at that in just a second here. Active listings, so the total amount of listings available in the Real Estate Board of Greater Vancouver is hovering at 8,600 homes available for sale at the end of March. And again, that's month over month, it's up 9.5%, much needed for the amount of sales that we're starting to see. And it's also up 8% year over year. So nothing crazy, is pretty in line with last year. Let's take a look at this listings, a total active listing, total inventory. So it's the amount of inventory that's available on the market at any point in time. And you can see this goes as far back as we can go back to 2005. You can see in the beginning of the year, spring market, the inventory goes up and towards the end of the year, it comes down because most homes are sold through and it's winter time. You can see what happened in 2008 to 2010, the global financial crisis. You could see the amount of inventory that hit the market and definitely had an impact on decreasing prices. But look at where we are today. I mean, here we are. This is the beginning of our spring market, and we're just like nowhere. Here we are looking at back of 2022, look at the amount of total inventory we had at that point in time, and coming back over 2016, 17, and 18, which is when we definitely had some upward price pressure. So you can see that the total amount of inventory is just not where we're used to seeing it. And this is favorable for sellers right now and the price stability and some of a price appreciation from last year, because anybody who's bought in the last year may have experienced some downward pressure on pricing in their homes. However, that switch is turning and we're starting to see more multiple offers in a very busy market, especially in the entry-level market. Now, having said that, properties must be, as always, presented well, priced well, and in the right location. Not everything is flying off the shelf. However, we are starting to see some motivated buyers who want to get out there and purchase properties if they're getting the right deal. So coming back to our stats, putting all of this into perspective, months of inventory. This is my favorite number. You should be tuning into this every month. 3.4 months of inventory. 4 months and below is considered a seller's market. We're sitting at 3.4, down from 7.3 in January, which is 6 months and above is a buyer's market. So 7 months of inventory was very much a buyer's market. And look how quickly we have recovered. And I just want to jump back into 2022 to see how things fared. This is the whole year. You could see that the beginning of this year was the peak of the market for 2022. You can see we had no inventory, well below 4 months of inventory, sitting in the 2s and sub 2 months of inventory. And then as we started to get our interest rate increases, as you can see here, sales really started to dissipate, nowhere near 2,000 sales a month. Inventory start to increase. You can see it hit almost just over 10,000 listings, and months of inventory start to increase. And of course, we started to see that reflected in the MLS benchmark price, and it was a steady negative for the last 3 quarters of the year. Seeing this, perhaps, this is the recovery and the floor that everybody has been looking for, and thus the renewed confidence. Bank of Canada, again, they just held the rates, and of course, prices starting to increase in the lack of inventory, and there's just more confidence out there that we're not going to continue to get hammered with rising interest rates. And there's people out there that are finally ready to enter the market because they don't want to miss out on that opportunity before we start to see price increases again, if that's what's going to happen here over the next 2 or 3 years or more. And nobody knows, but so far we're seeing that flip. There's, downward pressure has been eliminated, and I think we're hitting that floor, and we're starting to see 2 months in a row some price appreciation. Let's take a look at where we were in January and where we've come, just so you can see for anybody out there that potentially purchased in the peak of last year. This is for Metro Vancouver. In terms of breaking it down by detached sales, you can see for March, we had 734 detached sales. Back in January, we only had 295 sales. I'm going to jump over listings. Now we have 3,200 homes listed in Metro Vancouver that are detached. Back in January was 3,000, but the amount of sales is hugely different. And to sum it up, you can see months of inventory down to 4.4 months of inventory for Metro Vancouver for a detached home, as opposed to 10 months of inventory back in January. So you can see the drastic difference between January and March in terms of detached. Same thing. Currently, we have 1.9 months of inventory for a townhome versus 5 months of inventory, which was kind of balanced marketplace earlier in January. Only about 2.8 months of condos for Metro Vancouver compared to almost 6 months of inventory back in January, and 6 months being a buyer's market. Currently, with price appreciation, our benchmark price for a detached home in Metro Van is just under $1.9 million, still down from the peak of 2.1, just 13%, as opposed to almost 16% back in January. So about a 3% appreciation since then. And we are starting to see solid sales in terms of Metro Vancouver and detached pricing. Townhomes, now we're down just 8% from the peak at a benchmark price of $1,056,000. A nice change, down 11% from January of this year. Condos were sitting at down almost 15% in January, and now they're only down about 13%. So about a 2% appreciation there, and about a 3% appreciation for townhomes. We've got Vancouver West here. In terms of months of inventory for detached, today it's at 5.4. Down from 20 months of inventory in January. What a difference. So you can see these changes. We're in heavy buyer's market territory in terms of months of inventory, over 6 months of inventory here for Vancouver West detached townhome and condos. And today your detached and townhomes are sitting in about a balanced market, with your condos starting to sit in a seller's market. Again, this is very supportive for future pricing as the market and spring market continues on. Benchmark home in Vancouver West is our detached house is 3.2, benchmark townhouse just under 1.4, and the benchmark condo is about $827,000 right now in Vancouver West. Let's just skip right over to Vancouver East. January this year, detached homes were sitting at 10 months of inventory, townhouses at almost 11 months of inventory, and condos were sitting at 5.5 months of inventory. Those are all back down into a seller's market, sub 4 months of inventory. Amazing. And your benchmark prices are also are starting to strengthen as well. So you can see here, benchmark price for a detached home in East Van is 1.7. Benchmark for a townhouse in East Van is $1 million, basically $1,080,000, and benchmark for a condo in East Van is $688,000. We're starting to see a bit of a recovery here. So if you're thinking about selling, this could be the time for you. And definitely for sellers, with the change in the market psychology right now, if you have been thinking about selling or curious about what your home valuation is, please reach out to me for a market review, kind of giving you an idea of what's happened in your marketplace. And then also, if you're wondering about selling, but concerned about the lack of inventory, which is showing up right here, this truly is one of the issues that we're experiencing right now with sellers. Without sellers coming to the market, we will have lower sales. And then number two, we just have less inventory. And it's a chicken and the egg, because if the sellers don't want to come on the market because there's nothing to buy, then listings don't come on the market that they need to buy in order to sell. We do have strategies to help you with this. So if you are thinking about it, please reach out to me and we can have a consultation and discuss the opportunities, how to get you into your next home. Also, mortgage rates. The last Bank of Canada meeting earlier this week, the Bank of Canada decided to hold rates steady once again. This is the second time that they've decided to hold steady, citing that while they're seeing inflation come down and there is still higher inflation than they want to see, they realize that there are going to be many homeowners that are going to be renewing into this new high interest rate environment, and they want to see the impact of that and let that work itself through the economy. They know that anybody that's going to be renewing a mortgage into a higher rate is going to have less money to spend in the economy, and that in turn is going to decrease the inflation pressures, which is just price increases of our goods. Obviously, it's not just a domestic phenomenon, it's an international phenomenon with supply chain issues and energy prices and such. And so the good news is around the world, we're starting to see a decrease in inflation and even the European countries, etc., which is something that we follow. Now, good news for you if you're taking a new mortgage or renewing a mortgage shortly, while you're not going to get anything in the 2 or 3% range, we are starting to see with the recent bank failures and more pressure and data suggesting a future recession, and particularly the one around the bank failures in the US, there has been a decrease on the bond market. Now, what that means is it impacts any of the mortgage rates that are related to fixed term mortgages, where you have a mortgage rate that stays steady for that term. So what we're starting to see is in those 2, 3, 4, 5-year rates, you're starting to see a decrease in those rates right now. And if you wanted to secure a rate for the next 2 or 3 years, hoping that rates come down in the next 3 years, but protect yourself from any potential upward pressure, because rates can go up again. The Bank of Canada has stated that they are prepared to raise interest rates if they need to. And if we don't quell inflation, and if our real estate market continues to go a little bit, if this is the beginning of something, then they might have to reconsider their interest rate policy. And so you can protect yourself by taking, for example, a 2 or 3 year term, in some cases in a 5 or below 5% mark. And for some people who are in a variable mortgage right now, which is more dependent on what the Bank of Canada sets the prime rate at, so variable mortgages move with the prime rate, some people are already experiencing rates that are higher, like 5.8. So being able to lock in for 3 years at somewhere closer to 5 or sub 5 could be very good news for some variable rate mortgage holders. Now, the only thing is we don't know what the future holds. Rates could go up in the future. So variable rate mortgage holders, yes, your payments could potentially go up. However, the Bank of Canada suggested that they're going to hold things steady. However, if things continue to go the way that they're going, then we might actually see interest rates come down eventually, maybe as early as next year. And you might be able to ride that down in your variable term, Or if we just wait a little bit longer, fixed term rates might come down a bit more as well. So in some cases, if you're thinking about renewing, I know some people are banking on taking a shorter term, like a 6 to 12-month term, and waiting it out and seeing if rates come down a little bit lower, and then securing some kind of financing for another 2 or 3 years or so. And hopefully we get down into the more like lower fours or even a high 3% range if we're going to get there. That's in your mortgage news. If you need a good mortgage broker, we always have wonderful referrals. And of course, they're the experts to talk to, because of course, making any changes with an existing mortgage can incur penalties. But sometimes there's also features that you don't know about. Or new mortgages, one thing you have to be really careful of is the terms of those mortgages. You can be offered really great rates, but to get out of that mortgage, or potentially not being allowed to port your mortgage, those kinds of terms can be very expensive. So make sure you find out what all those details are, and speaking to a mortgage broker or mortgage professional is the best way to do that. And we definitely have some fabulous recommendations for you. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. I look forward to connecting with each and every one of you. And please reach out to me if you want more market information about what's happening if you're thinking about purchasing a property. And sellers, if the thought has crossed your mind, please contact me so we can do a complimentary CMA or just a market review, or discuss strategies on how to get you into your new home. And please remember to like and subscribe to my YouTube channel and to my newsletter if you are not receiving this video in your inbox. Thank you.